Welcome back to the show, my friends. Today is Christmas Eve, almost Christmas Eve here. And I thought I'm going to bring you the best trade you can take for the next 2 days. And I know the answer is going to shock you, and I'm going to kind of spoiler the whole thing, but the best trade you can take is no trade. And I'm going to deep dive into why it is and why most people lose. We're going to talk about overtrading. We're going to talk about revenge trading. We're going to talk about all the mistakes you're making in your trading that could easily be avoided if you just implemented some easy steps. So I'm gonna teach you and show you how you actually make your mistakes in trading, and I'm gonna show you what the solution might be. And I'm also gonna encourage you to not trade for the next 2 days. And at the end of the show, you're gonna understand why. If you don't know who I am, my name is Fefe. I bring you the best alpha over at Crypto Banter Plus. I'm a trader, I'm a host, and I'm here to help you make money. This is what I dedicated my life to. This is my third bull market as well. So yeah, I think I've got 1 or 2 tricks up in my sleeve that I can give you. So that said, let's jump into it. Number one, I said no trade is the best trade for Christmas holidays. The most important thing that you have to understand is that all the time trading, there's a misconception that you have to trade a lot in the bull market and you always have to trade and this and this and this. And it's not true. The amount of trades you take does not equal, or there is no direct correlation with the amount of money you make. Because trading doesn't work like the fact that you just start throwing a billion dots and then you get out on top and then you make some money. You have to have a plan and you have to execute on that plan. And what a lot of people screw up, and number one in what a lot of you are most probably screwing up, is overtrading. How do you overtrade? Now, overtrading can be a lot of things. So Ren always tells me I'm overtrading when I'm taking like 7 or 10 trades a month. And depending on what strategy you follow, this could be the case. But overtrading basically means for you to become a profitable trader, you need to have a trading plan. And that trading plan needs to show you exactly what is your edge in the market. So it will tell you exactly, you have to enter the market when you see, for example, for me, when you see a lower time frame market structure shift in the price action. When that happens, I can enter a trade. The problem really comes when I'm not seeing that for 2, 3, 4, 5 days, 10 days, 2 weeks, whatever your strategy might be. And then I start imagining or forcing myself to get into trades, even though the setup that I have is not there. So the reason why this is a problem, and I actually have a decent setup here that I set my iPad here so I can draw for you. The problem comes in is that you take 1 trade, 2 trade, 3 trades, and all these trades are losses. Why? Because you did not follow your strategy. Now you're down 3 times your money. And you have to make back all this. If you have a risk reward of 1 to 3, meaning if you lose 1 unit, and if you win 3 units, this already eliminated because you were forced trading, you were over trading, you were trying to trade too much, even though your angle didn't show or your edge didn't show in the market. Now you're already you're already down 1 opportunity, or basically 3 opportunities, but 1 stop loss, and it's already out of the window. The problem here comes is that when you start losing, and that leads me, so the takeaway here is do not ever overtrade. Have a clear plan, wait for your strategy, wait for your edge to show. For me, for example, if you want to see, so I trade something called price action and market structures, and what you can now this setup is cool, but it's not like the perfect setup yet. That's fine. So I usually trade when the market goes, the market is in a downtrend, for example, and I'm looking for a reversal. I'm gonna wait for something like this to happen. This is a market structure shift. So when this happens, I say, okay, we have a market structure shift here, which is basically showing that we had a low, a high, a low, a high, a low, a high, and then eventually at some point we have a higher high, and that shows that the market is broken. And then I can enter here 50%, wait for a 50% retrace, enter my money, and this is how I ride the wave. But what happens usually is, especially when I started to learn how to trade, what happens is that even though I don't get this market structure shift, when I have this, I start long in here, for example. Why? Because I'm impatient. And as I long here, I don't realize that this can still reject. And then when it goes below, what happens is that you keep adding your losses because you were not prepared to trade your plan up here, and you're not prepared to trade your plan down here either. And therefore, you are overtrading. So the best thing you can do is very, very simple. Make sure that you have a strategy, yours, whatever it is. If it's an RSI cross, that's your strategy. If it's a MACD cross, that's your strategy. If it's volume, that's your strategy. But focus on your strategy and follow your strategy through. The second thing is revenge trading. And this is a very, very good example, what I just showed previously, on how reverse trading happens. Let's say you're not trading, you're overtrading, you're not trading your plan. As the market starts going down, and for example, I just explained to you what my trading plan, very simply what my trading plan is, so what my edge is. So if I was not following my edge, I would just add here because I would be like, okay, now it's probably going to break above and everything is going to be fine. And then when it doesn't, what happens is that I get stopped. Then there's two emotions that play a role here. One is, holy shit, I got stopped. That is a problem. Also, guys, I didn't tell you, but please subscribe to the channel if you like this content. Subscribe to the channel, smash the like button, share it with your friends. I'm dropping you the alpha you need, in my opinion. I lost $250,000 before I became a profitable trader. It took me a lot of years to actually get here. So all the things that I'm sharing with you, I'm not just preaching, I actually been through it, and you probably recognize a lot of it on yourself if you want to become a profitable trader. And if this sounds good, and if you want to learn more from me, here's where you can find me on X. There's a link in the description as well. But make sure to check me out and smash the follow if you feel like it. Okay, so you get stopped here, and this is 1 minus, right? So you already have a loss here. You might not even had a proper risk management, so you maybe lost much more than what you wanted to lose, and this and that. So you don't know, but this is the basic scenario. And then something happens. Market goes up, you long again, because this time you must be right. Then you take a stop. Again, now you're 2 down, and you're frustrated because probably if you're a beginner trader, you most likely are doing it. And be honest, not with me, but with yourself, is here you're thinking, geez, I'm down 2 times my stop loss and I still haven't made any money. So when the third opportunity comes, what you're gonna do is you're gonna double down or triple down on the risk that you had, because if it wasn't this time, it surely has to be the next time. And if it wasn't the next time, then it surely has to be this time. This time is different. And so what happens is that you start doubling down, you start increasing your risk, and you're not sticking with your risk management. And so when this happens, usually you get stopped 2, 3, 4, 5 more times until you liquidate yourself, just because you weren't able to contain your emotions and you weren't able to wait out the perfect setups that do come for you. So what is revenge trading? When you take a loss, the worst thing you can do is to double down on your risk and be like, this time is going to be different, because that's what really screws with your mind. And as you progress on becoming a successful trader, you will learn that becoming a successful trader is not about the edge that you have in the market. It's not about the edge that you have in the market. It's about understanding yourself. It's about learning how you behave in stressful situations. It's about learning about yourself, how you behave when you lose. It's about learning yourself how you behave when you win. And once you can control all your emotions, regardless of the outcome of a trade, that's when you will become profitable. So revenge trading, how to protect yourself against revenge trading. Number 1, again, have a strategy. If my strategy says that I trade a 1 to 5 risk reward trade, this means every time I get a stop loss, I will lose 1 unit. Every time I get a win, I will win 5 units. So if my stop loss is $1, for every $1 I lose, or every time I get a stop loss of $1, every time I win, I make $5. If this is my scenario, that means that I have to understand what is my hit rate, and let's say that my hit rate, which means how many times am I right? Let's say it's 50%. That means I can lose on this. Let's say I have 10 trades, 50% hit rate. This is smooth. Let me know in the comment section if this thing actually makes sense, and it's pretty decent. So 50% hit rate. That means that, let's say, out of 10 trades, I can have 5 losers. Okay, 5 losers. So if these 5, and the same goes for 100 trades. 100 trades equals 50 losers. This is just math. You don't know when these 50 losers come. You don't know. Maybe they come all at once. Maybe you're going to lose once, twice, 3 times, 4 times. You don't know. Now, the probabilities, obviously, is not going to all come after each other, but they are going to come. And maybe you're going to have, this is what we call a drawdown, when even though you have an edge, even though you follow your edge, it just simply doesn't play out, because trading is a game of probabilities. And so you have a drawdown. And the worst thing you can do is if you understand all this, if you understand that I lose 1 unit, I win 5 units, that means I can lose 5 trades to make 1 trade back, because I lose 5 times $1 is $5, and I have 1 winning trade out of 6 total trades. I'm still making back my $5, so I'm good. then you're good. The only way you can screw this up, even though that you're losing, just losing, is by changing the strategy or not sticking with the strategy and not following your risk reward. So whatever happens, make sure when you catch yourself on revenge trading, even if you revenge trade, ask yourself, is this overtrading and I don't really have an edge here? Or is this revenge trading where I increase my leverage? Even though you can have the perfect setup, if you increase your leverage, if you increase your risk, because you want to make back your losses, you're revenge trading, and eventually, on the last scheme of things, you are going to lose. So do not do that. Third is not following the plan. So everything I talked about really comes into this as well. But the third main thing is not following the plan. I'm going to go back to this example again. If my plan is that I have, it's actually here. If my plan is that my hit rate is 1 to 5, my win rate is 1, my risk reward is 1 to 5. That means I can lose $1 if I lose a trade, and I can make $5 if I win a trade. And my hit rate and my profitability, my hit rate, my winning rate, how many times I'm right, 50% of the time. That means that if I still lose, again, as I don't want to go in depth what I just explained, but it's very important for the plan following. If I lose 50 trades out of 100, I'm still following my strategy. Everything goes as planned. The worst thing that can happen is that you start not following the plan. Let's say you lose 1 time, 2 times, 3 times, 4 times, 5 times. You do not follow your plan of risk management. For example, instead of using 1% risk, you're going to use 10% risk. This will kill 50% of your accounts by just simply modifying the risk. Or you can say, maybe you're going to lose 10 trades and you're going to lose the 10 trades. And you're going to risk 1% on each trade, but then you're going to say, I lost 10% of my account. I do not want to do that. I'm going to increase my leverage to 2x because now I'm going to make this back in 2 trades because that's how my risk reward should go. Now, there is a very good lesson that my teacher told me on class when I was studying innovation. And the lesson goes like this. There is a guy who opens up a Lamborghini repair shop, okay? And he does not have a client for the first 6 months. And the question really is, should he, and there's a Toyota that comes in and says, I need oil change. Should the guy do the oil change for the Toyota, even if he's paying premium, or he should not do it and just wait for the next client? And the answer is, even though you think you should take the Toyota, you should not take the Toyota, even though you're losing money for the past 6 months, because of the exact same reason. You have a plan. And the plan is that I can lose 50% of the trades. I can lose 20, 30 trades because my risk management can handle, because my edge is there in the market and I'm following my edge. I'm not overtrading, I'm following my edge. So the only thing, I have to mention this, talking about Lamborghinis, there's an incredible partner of ours, Funtico. There is a game that's happening right now with Hustle, and between Hustle's community and my community. Here's how the game goes. I want you to enroll. You are almost guaranteed $20 to $1,000. Here's what it goes. They have a game, Funtico. You have to sign up. You have to come here, connect accounts. You have to link your wallet. Your wallet is simply your MetaMask. And once you come back here, you can play this mini clip type of little car racing game. Come down here for Formula Funtico. So the way it works is that this funny game, obviously you gotta like shoot at each other and race at each other. And if you enroll in our tournament, you are able to earn a reward if you finish on the great place. So here, for example, Radiant, why is Hustle's guy leading? Come on. This guy is in my team, but anyway. So you have 9 tries. You have to go around. It's actually a very funny game. I tried it. I played like hours with it yesterday. It's actually a very cool game. But if you are number 1, 2, if you can complete the laps, 5 laps all at once, if you can complete it with 240, below 240, you get $1,000 as a win and a silver ticket for the $100,000 competition. So it's worth enrolling here. They're a new game. They're going to have their token launch in January. They have a Telegram game as well. Everything in the description. But a lot of times you ask me, a lot of times people say, why don't you just send me Solana? Why don't you just help me? You have to play a game to make money. I don't know where can I see? Can I see, select player? Oh, okay. Can I go Fefe the G? Where I am? Player not found, Fefe. I can't scroll here for search here. Anyway, but maybe it's capital letters. Oh, here we go. So I'm guaranteed $20, and I was shit. 347, I was shit. Anyway, guys, make sure to check them out. There's a link in the description, and enroll. You literally just gotta play a game and make money with it. It's absolutely incredible. So let's jump back here. Not following the plan. So going back here, the saying is, you plan the trade and you trade the plan. If your plan is that you're going to make 1 to 5 risk reward and you're gonna have a 50% hit rate, you play it. You do not change, you do not risk more, you do not take the trades within the outside of your edge. You follow you plan the trade and you trade the plan. Very, very important. And that goes on to my next point, which is journal. And this is something you can do throughout the holidays instead of trading. Journaling, reviewing your journal. Now, why is this very, very important? A lot of people, when I was learning how to trade, a lot of people were telling me, oh, you have to journal and it's awesome and it's great. And probably a lot of people tell you that as well. You have to know your entries and exits, and that's all garbage. Like, I will tell you now, that whole thing does not make any sense. The only thing you have to do when you're journaling is to note down your emotions. Emotions is important because trading is a game of probabilities, and trading is a battle with yourself, you against you on the trading board, okay, at the trading board. Why? Because when you have a very big winning position, but your risk reward says you should not get out because that's your trading plan, and you still get out, then you could not conquer yourself. If you have a big loss and your trading plan says carry on because it's gonna be fine, and you get out and you lose, it is because you could not conquer yourself. So journaling is not there to record your exits and entries and all that shit. That's not why it is there. It's there for you to understand what emotions you went through. It's there for you to understand what type of person are you. Are you a greedy guy? Are you like, or girl? Are you like looking at the chart and be like, oh, this can 10x. I know I'm up 5x, but this can 10x. Are you a person that doesn't want to lose? You risk very little and you don't want to lose. You cut your winners very, very fast, and you let your losers become bigger losers because you're afraid to lose. When you figure that out, when you know your trade, literally enter. This is what I did. You enter a trade. This is literally what I did. So you enter a trade here and you say, I don't know, let's say BTC trade, right? Of course, if you want, you can enter exits, enter whatever. This doesn't really matter. What matters is I can say, I was in a loss and I got out. And then you can say, this is what happened, right? So you can go description. And then emotions. What happened when I felt? What did I feel? I didn't want to lose. Why? Ask why. Why didn't you want to lose? Because it was too much money. So there, you already know that you were risking too much. By understanding there was too much money, you already know that if it was too much money, you risk way too much. So that's a tick. You can just write it out. I risk too much. Next time I know what to adopt. And then you can go, why? Because I just simply don't want to be wrong. Well, that's also something to work on, because in trading, you are going to be wrong a lot of times, and that's fine. That's why you have a risk management. That's why you have a trading plan. That's why you follow these steps. So once you do the journaling, it's very, very important that you do your journaling correctly. And as you do your journaling, you uncover what emotions you're going through, and then you can work with them. I actually went with a psychologist and I actually talked to a person about my mistakes in trading. I talked to her and I told her the problem is this and this and this. And for me, the problem was I always had to be right. I always had to be right. And then through work and personal development, I realized that I don't have to be right on trading because it's a probabilities game. Nobody knows. It's a multi-trillion-dollar industry, and you don't know what's happening on the other side of the world. You long a token, perfect setup, and it goes to bust. And then what? Nothing. Why? Because it's out of your hand. Your only job is to understand yourself, backtest the strategy that you understand works, and then just simply go through that strategy like a robot. So journaling is very, very important. And then I want to round this up with some thoughts here, which is be with family. And I know it will sound cliche, and I know a lot of you will be, but I did some calculations here. Actually, I didn't do it. It was OpenAI. What is it? ChatGPT that did it for me. But there's a lot of things to consider here. One is, if you're 30. Let's say you're going to be active till you're 75. So you've got about 45 years left. Now, hear me out here. You have 16,000 days left, about 16,000 days. If you meet meet someone every 2 weeks, so you meet them 2 times a month. You know, I don't meet my dad 2 times a month. I don't meet some of my very good friends 2 times a month because I just don't have time. To meet someone 2 times a month, you're gonna meet them 1,000 times. That means you're gonna spend time with them less than 1,000 times in the next 16,000 days. But I'm gonna make it a little bit of a twist. What if someone doesn't live as long as you do? What if someone is older than you? So if you see your kids, for example, 3 hours every day, and you see, so your kids obviously gonna live longer. Sorry, I just noted these down here. So if you see your kids for 3 hours every day, and you're 30 years old, until 75, you are going to spend about 45 years. In that you will see them for less than 5 years. So you're gonna see them for about 2,000 days total out of the next 45 days if you spend 3 hours per day with your kid on average, because they go on holiday, you go on holiday, you go on trips, whatever that is. So if you add everything up, what I all wanted to say, and I did this quick research here, is that you don't have time. And that goes for me as well. I spend 90% of my time here at work. And when it's the holidays and when it's Christmas and it is what is happening, please spend time with your family. Genuinely, just spend time with your family. Play the game, spend time with your family, and enjoy. The markets will be here. I promise you, I've been here. I thought the markets will not be here and I have to make all my profits now. That's not true. The markets will be here. The markets will wait for you. And no matter how much money someone makes in the holiday where you spend time with your family, you don't have a lot of time. That's the honest truth. You think you do, but you don't. So please take this opportunity to go on holiday. And I wanted to tell you one more thing, which I forgot. We have an incredible exchange partner. Again, another thing, before you turn off, a lot of you are telling me, why don't you give us money? The way I try to manage our deal flows is the following. I want the exchanges to give you guys something anytime they want to come on my show as sponsors. So, for example, what Bitunics did is they offered a 20% deposit bonus. That means you deposit $2,000 on Bitunics, you get $400 to trade with out of the bank. Okay, you can't withdraw that money, so you have to trade with it, but you can take a 10x leverage position now, just leave it for Christmas and see where it goes. You literally risk nothing, zero. Okay, so check them out. There's a link in the description. Every time I hear someone say, why don't you just give me money? This is what I think of. It's a free opportunity, non-KYC, incredible exchange, 20% deposit bonus. You should check them out and you should use this opportunity. It's a Christmas gift from me to you. Guys, truly, truly, truly appreciate every single one of you for watching. If you like this show, please let me know in the comment section. I would love to hear your opinion. I like this drawing thing, so I might just actually do some trading strategies and much more with this. But if this sounds good, smash the like. Share it with your friends for Christmas. Check it out in the description, all our partners and everything else. Let me know in the comment section. Follow me on X. You can find it here, and there's a link in the description as well. And yeah, truly appreciate you. And I believe I'll see you in the next one. Happy holidays.